nongeye kubasuhuza bakunzi ba Ange Fabrice Muhire official, nk'uko nabibasezeranyije tugiye kureba accounting tuyinjiremo neza, hanyuma buri umwe wese abe yasobanukirwa bigize accounting, by'umwihariko ku bazahitamo umwuga w'icungamutungo, cyane ko nk'uko mwabibonye ibikorwa byacu byinshi byibanda kuri iyi kariyeri ya accounting. Munyemerere rero duhere kuri introduction to financial accounting, kuko nk'uko mubibona ntabwo bigoranye, cyane ko tuzagenda turebera hamwe iby'ibanze biyigize, ariko noneho umunsi ku wundi tugende tureba icyo nakwita nka advanced accounting. Tuzagenda tuyinjiramo gake gake, ariko twese tujyane ku buryo n'abo tutabashije gutangirana uyu munsi bazajya babasha gusubiramo ibiganiro twakoze cyangwa se inyigisho twatanze, ku buryo buri umwe wese yabasha kubikora cyangwa se kubisubiramo. Niba uri umunyeshuri, tukagufasha guhuza amasomo yawe no gukora etide, kimwe n'uko ushobora kujya waba warayize ariko kugira ngo usubiremo ibyo wize bigufasha. Ndumva byumvikana kandi bizadufasha. Ni muri urwo rwego rero tugiye gutangira iri somo. Turarivuga mu Cyongereza, mutwihanganire, ariko muri comment muzi ko dufite WhatsApp channel, dufite WhatsApp group. Utazajya abasha gusobanukirwa tumufashe gusobanukirwa iby'ibanze twaba twatwigishije, ntiyumve inbox cyangwa se no muri comment y'iyi video, nabyo birashoboka. Mu kanya gato rero turatangira. Ubwo niba uri hafi y'agakaramu, nyamuna bangukane, hanyuma dutangire mu kanya gato. Tangire. Now we just start with chapter 1, which is Introduction to Financial Accounting. Accounting involves a process of collecting, recording, and reporting a business's economic activities to users. It is often called the language of business because it uses a unique vocabulary to communicate information to decision makers. To understand accounting, we first look at the basic of forms of business organization, the concepts and the principles that provide the foundation for financial accounting are then discussed. Therefore, we will be seeing them with an emphasis on the corporate form of business organization. We will examine how we communicate to users of financial information using financial statements. Finally, we will review how financial transactions are analyzed and then reported on financial statement. This is all about what we are going to see in the first chapter. planning objectives include defining accounting, identify and describe the form of our business organization, identify and explain the generally accepted accounting principles, identify and explain and prepare the financial statements, analyze transaction by using the accounting equation. Now we have the concept self-check. Use the following as a self-check while walking through chapter 1. What is accounting? What is the difference between internal and external users of accounting information? What is the difference between managerial and financial accounting? What is the difference between a business organization and a non-business organization? And what are the three types of business organizations? What is a PAE and a PE? All of those is what we be uh, able to know at the end of this chapter. Considering also what does the term limited liability mean? Explain how ethics are involved in the practice of accounting. Describe what GEEP refer to. Identify and explain the 6 qualitative characteristics of GAAP. Identify and explain at least 5 of the 9 principles that support the general accepted accounting principle qualitative characteristics. How is financial information communicated to you external users? What are the 4 financial statements? Which financial statement measure financial performance, financial position, and what information is provided in the statement of cash flow? Explain how retained earnings and dividends are related. What are the 3 primary components of the balance sheet? Equity consists of what 2 components? And how assets are financed? Finally, we will see identifying and explain the 3 types of activities a business engages in. What are not to financial statements, and what is the accounting equation? What are the distinction among calendar, interim, and fiscal year ends? Note that the purpose of these questions is to prepare you for the concept introduced in the chapter. Your goal should be to answer each of these questions as you read through the chapter. If when you complete the chapter, now you will be enabled to answer one or more of the concept self-check questions. Go back through the content to find the answer. Solutions are not provided to these questions. It requires you self-understanding. Now, let us define accounting. Accounting is the process of identifying, measuring, recording, and communicating organization's economic activities to users. Users need information for decision making. Internal users of accounting information work for the organization and are responsible for planning, organizing, and operating the entity. The area of accounting known as managerial accounting serves the decision-making needs of internal users. External users do not work for the organization and include investors, creditors, laborers, union, and customers. Financial accounting is the area of accounting that focuses on external reporting and meeting the needs of external users. This book, which we are going to see, or I will just analyze, tried to present to you, will just be an overview for you to understand clearly what is there, everything related to that thing. Now, what is business organization? A business organization is typically a group of individuals who come together to pursue a common set of goals and objectives. There are the two types of business organization: business and non-business. A business organization sells out the product and or serves to for profit. A non-business organization such as a charity or hospitality exists to meet various society needs and does not have profit as a goal. All businesses, regardless of types, report, and most importantly, use accounting information for making decisions. This book, which we will be using, will focus on business organization. There are three common forms of business organizations: a proprietorship, a partnership, and a corporation. Proprietorship, this is what we are going to start on, is a business owned by one person. It is not a separate legal entity, which means that the business and the owner are considered to be the same entity. This means, for example, that from an income tax perspective, the profit of a proprietorship are taxed as part of one of the owner's personal income tax return. Unlimited liability is another characteristic of a sole proprietorship, meaning that the business could not pay its debt. Yes, means that the business could not pay its debt. The owner characteristics or the what the, is that if the business could not pay its debt, the owner would be responsible even if the business's debt were greater than the owner's personal resources. This should be well understood. On partnership, a partnership is a business owned by two or more individuals. Like the proprietorship, it is not a separate legal entity, and its owners are typically subject to unlimited liability. This should be well understood. Now, on corporation, a corporation is a business owned by one or more owners. The owner are known as shareholders. A shareholder, we have to remember that or keep in mind that owns shares of the corporation. This must be well understood. Shares are units of ownership in a corporation. For example, if a corporation has 100 shares, 1,000 shares, there may be three shareholders where one has 700 shares. That is an example. Another has 200 shares, and the third has 100 shares. The number of shares held by shareholder represent how much of the corporation they own. A corporation can have different types of shares. This topic is discussed in a later chapter to which we will be seeing. When there is only one type of share, it is usually called the common shares.
A corporation's shares can be privately held or available for public sale. A corporation that holds its share privately and does not sell them publicly is known as private enterprise. Now, a corporation that sells its share publicly, typically on a stock exchange, is called a public accountable enterprise, or PEE. In like the proprietorship and partnership, a corporation is a separate legal entity. This means, for example, that from an income tax perspective, a corporation files its own tax return. The owner or shareholders of a corporation are not responsible for the corporation is debt to have limited liability, meaning that the most key that what they can lose is what they invested in the corporation. And larger corporation, there can be many shareholders. In this case, shareholders do not manage a corporation but participate indirectly through the election of a board of directors. The board of directors does not participate in the day-to-day management of the corporation, but delegates this responsibility to the officers of the corporation. An example of this delegation of responsibility is illustrated in the figure that we are going to see. Now, generally accepted accounting principles shows us that the management of the business is shown as here shareholders are the owners, they elect board of directors who represent or the owners. Then those board of directors appoint president, vice president, marketing for vice president, and vice president in finance and in production. Now, shareholders usually meet and agree to elect a board of directors. The board of directors meets regularly to review the corporation's operations and to set policies for future operations. Unlike shareholders, directors can be held personally liable if a company fails. The focus of these chapters will be on the corporate form of business organization, the proprietorship, and partnership organization will be discussed in more details in chapter 13 that we will be seeing in this chapter on this book as well. The exploration is available on the that I will share you the reference where at the end of the course of the owners accounting, this introduction to accounting, we will be able to see all things in the references so that you can make further research. Generally accepted accounting principles, those are the set of generally accepting principles as well. It is very clear here. The goal of accounting is to ensure that information provided to the decision makers is useful. To be useful, information must be relevant and faithfully represented. A business economic activities. These require ethics, belief that helps us differentiate right from wrong in the application of underlying accounting concept or principles. These underlying accounting concept or principles are known as general accepting accounting principles, as I mentioned in the area. For example, GAP in Canada, as well as in many other countries, is based on International Financial Reporting Standard (IFRS). For publicly accountable enterprise, IFRS is issued by the International Accounting Standard Board. The ESB's mandate is to promote the adoption of a single set, every single set of global accounting standard through a process of open and transparent discussion among corporation, financial institution, and accounting firms around the world. Private enterprise in Canada, for example, are permitted to follow either IFRS or accounting standard for private enterprise. RSPE, a set of RACE 1 rules, GAAP was the standard developed by the Canadian Accounting Standard Board. The ISSB is the body that govern accounting standard there. Focus on this book, you can see that the refer on FRC or PAEC. Accounting practice are guided by GAAP, which are comprised of qualitative characteristics and principles as already stated. We have stated it, and it is clear that everyone can be able to understand this. Relevance and faithful representation are the primary qualitative characteristics: comparability, verifiability, timeliness, and understandability. Understandability are what? Are the additional characteristics information that possess the quality of what we are going to see. There is relevance. Please keep in mind that there's qualitative characteristics. Once one or more are missed, the information provided in accounting are not faithfully represented, or the accounting data that they provided there will be useless because they lack one or more of those qualitative characteristics. Now, allow me to continue by seeing them. There is relevance that has the ability to make a difference in decision-making process. Faithful representation is complete, neutral, and free from error. There's comparability that tells us or users of the information that business utilize similar accounting practices through time. Yes. Verifiability means that all others are able to confirm the information faithfully represents the economic activities of what? Of the business. Timeliness is available to decision makers to be useful. Understandability is clear and concise. Now, we are going to see the table that shows us the short explanation about that accounting principle, business entity. I have tried to show you. Please remember to visit my community on our YouTube channel, because some of the quizzes, personal quizzes, self-review will be available on my YouTube community. There, you will be able to visit them. Now, business entity requires that each economic entity maintain its separate record. Example, a business owner keeps separate accounting records for business transaction and for personal transactions. Consistency means that consistency requires that a business use the same accounting policies and procedures from period to what? To period. Example, a business uses a particular inventory costing method, a delivery. An example on this as well. A business is applying to the bank for a $1 million loan. Much more money than we have required. Able to understand it. All indications are that business X